If you're at the stage where you're earning over or you've got sales in excess of $10,000 per month pretty consistently, then you're going to have a lot of options start to open up to you in terms of funding from external companies. You know, there's people like Wayflyer, Clearco, Shopify Capital, things like that that will start to offer you money to help you grow your business. Now, this is by no means a negative against any of these companies. I just wanted to basically bring to your attention the way things can go and really hurt your business, and you'll fall into what's called a debt trap if you don't know your numbers properly. Essentially what happens is these companies will lend you money, but they will take a percentage of your revenue to pay it back. So they don't take any equity, they don't take any ownership, but say for example, they lend you 20 grand, they will then take 15 or 20% back of your daily sales. Also, what will happen is when you scale your business or when you grow with capital like this, you need to also expect for some of your costs and your business costs associated with growing to rise. Your advertising costs are going to go up, but when you scale rapidly, generally what will happen is you will become less profitable with your ads. That's very common. But also, you know, you may have more costs for customer service, you might have more costs for fulfillment, storage, you know, you may need to outlay more money to buy stock in advance. You need to be mindful of that because you will get all this money from one of these companies to spend on advertising or stock and all that sort of thing, but you can very quickly run into the trap that when your sales drop and your expenses are still high, you are then in the situation where you may have spent the majority of that money scaling or growing, and what's happened is you then are still paying back 20% to these companies on the outstanding debt. What happens is you'll end up in a bit of a debt spiral where you then need to go back every month or every 2 months for top-ups to basically keep your cash flow going, because your margin is not high enough or may not be high enough, and your sales may not be profitable enough with your current return on ad spend to grow and pay back that 20%. But like I said, I'm not saying that these aren't great opportunities to grow, but just be very cautious that you can cover your product costs, your fulfillment costs, your business costs, your advertising costs, and then lose 20% potentially off the top to pay back that debt.